Hi everybody, my name is Ganesh. Today we are going to learn an important topic which is useful for year-end financial year-end 2021-22. So by March 31st, one should consider these important topic or points before year closing. Let's understand what is all important that. You know that sometimes we can also earn without doing anything. This is a technique, one of them. A smart technique to earn smart money, which is tax loss harvesting. Let's see what is all about that without wasting much time. Taxation. I'm going to divide this taxation part into two types. Taxation on stocks, taxation on mutual funds. I'm not going to cover about that taxation rules or investments, how to save tax, 1,50,000 ATCC or 2 lakhs, different sections. No, I'm not going to cover, assuming that all those things you are already aware of that. But think that one should understand how one can save tax before 31st year 2022 financial year. That's it. And so if we understand the taxation of both stocks and mutual funds, how to save tax using tax loss harvesting technique. What are the types of taxation? So there are taxation are like calculated two different ways. Against short-term capital gains and against long-term capital gains. What are the short-term capital gains? Selling your stocks or equity mutual funds, either of them are the same in nature for the tax purpose. Within 1 year, attracts 15% tax on profits. Let's say, one example, you invested 5 lakh rupee. Current value in a year, it became 7 lakh, which means straight away we see 2 lakh rupees profit. So as per the taxation rule, within 1 year is 15% on tax, 15% tax on profit of 2 lakh, which is 30,000. Right? This is something we need to pay to the government. Let's understand long-term capital gains. How is taxation on it? Selling your stocks or equity mutual funds after 1 year attracts 10% tax on profits. We all know that no tax up to profit of rupees 1 lakh per year, that is exempted. Let's take an example. Say you invested 5 lakh, current value became 7 lakh, so 2 lakh profit. Tax on first lakh profit is 0, which is exempted, and tax on next 1 lakh is 10%, that is 10,000 rupees tax to be paid to the government on long-term capital gains. Hope it is clear. Now let's understand mutual funds concept. Equity oriented mutual funds, that is one category. Another broad category is debt oriented mutual funds. Equity oriented mutual funds and direct buying equities both are on the same category. Tax rules applies are applicable to both of them are the same. But when it comes to debt oriented mutual funds, they're slightly different. Here, short term is considered for a period of 3 years. Right? So equity is considered only 1 year, below 1 year. But here, debt oriented mutual funds, short term is considered for 3 years. Taxation falls as per one's tax bracket. If you are in 10% tax bracket, you have to pay flat 10% tax. If it's 20%, 20%, or if it's 30% or above, you have to pay 30% flat tax within 3 years. So if it is debt oriented mutual funds. Whereas long term is considered for a period of above 3 years, which means here taxation is flat 20% with indexation benefits. This indexation is calculated based on inflation rate. Generally, we see that inflation keeps rising every year, right? So based on that, this will be adjusted. After adjustment of this indexation, that tax comes to around 15 to 18%, which is good. So the longer period you hold a debt-oriented mutual fund, you will get a good benefits. Shorter period means you lose those benefits. That is all about debt-oriented mutual funds. I'm not covering about much mutual funds. This concept is quite simple, and we all of us know that. So I hope it is clear. Let's move on to actual topic of types of tax loss harvesting. As we see, taxation is two types, like tax loss harvesting is also two types, like tax loss harvesting for short-term capital gains. How is that? We'll see that. And tax loss harvesting for long-term capital gains. How is that? We will see that. Tax loss harvesting for short-term capital gains. How does it? How is it? Tax loss harvesting for short-term capital gains is, let's say you invested in 10 stocks. 5 stocks were sold for profit of 2 lakh. Tax on profit is, we know that, 30,000 that we have seen in the equities for 1 year, within 1 year. How do you avoid this tax? Can we avoid this up to some mind? Let's see. So what we can do, so let's say there are 5 stocks which are giving 1 lakh loss. Out of holdings of 10 stocks, 5 are giving you 2 lakh profit and 5 stocks are giving you 1 lakh loss, right? So what do we do? In this case, sell these 5 stocks at loss and repurchase them immediately. Nothing goes wrong, right? You can sell at loss, again you can buy it back. If you feel those are quality stocks you would like to hold for long term, you can continue to hold. But for tax harvesting technique, you need to sell these loss making stocks. So you have profit of 2 lakh, you have loss of 1 lakh. So total profit is 2 lakh minus 1 lakh, which is a 1 lakh. So effective tax on profit is now comes to 15,000. So straight away you saved 15,000 rupees. This is, it totally depends on person to person. More stocks we have, more profit and losses you are having. So you can rebalance like this, right? This is straight away you are saved 50% of tax. So we saved means that is you earned 15,000. You know, all of us know that money saved is money earned. So without doing anything, using this tax loss harvesting technique and short-term capital gains, you saved by one click 15,000 rupees. Now let's understand tax loss harvesting for long-term capital gains. Identify the stocks that are being held for more than 1 year. Calculate the profit not more than 1 lakh. So stocks that are giving you profit, and calculate which gives you up to 1 lakh. Because we know that per year 1 lakh profit is exempted from the tax. So sell those stocks to book the profit. Repurchase them immediately again. So here you are saving 10,000 rupees. So if you do like this, long-term capital gains, you can save 10,000 rupees. So earlier short-term capital gains using the tax loss harvesting, you saved 15,000. Long-term, here you saved 10,000. Totally 25,000 rupees is saved because of this using tax loss harvesting technique, right? You just did anything to make money. Just a smart technique actually helped you to earn 25,000. So this amount is totally even keeps varying person to person based on your investment and all your stocks and all other parameters. So note. So somebody would ask how these stocks are sold, because I have stocks I purchased which fall short term, and same stock when I purchase time is long term. So normally how stocks are sold is default is FIFO mode, first in, first out. Stocks that you bought first are sold first. These are the techniques. So based on the timelines or broker, you just extract the report and you analyze, and based on that you can identify the stocks and sell. So tax loss harvesting in Zerodha broker. So this broker by default is giving you some template or report, so you understand that. I will show you how it is. Zerodha console, one can go to the console and reports. You can see tax loss harvesting per financial year 2021 and 22. There it appears like this: short-term tax loss harvesting opportunity and a long-term tax loss harvesting opportunity. So it displays like this. If you have not seen already, please go and analyze or watch out this report on your broker. This is as per Zerodha. Maybe your broker might be having some other way. Just you find out, so that it would classify that equity opportunities and mutual fund opportunities, what is all about that, right? So you can understand. One main point I would like to explain that this tax loss harvesting would help you only realized profit and losses, not unrealized, not for, it's not applicable for notional loss or notional profits, right? This is not applicable on paper gains or paper loss. This is only to just to avail this tax loss harvesting technique. You should make convert those transaction to realization, means either you sell, buy. So that is how the transaction come under this, use this technique. So all those things you have to do within this 31st of March 2022. So you have hardly 1 week of time. Please rush to that and identify and analyze and save money as much as possible based on your investment. Hope this video is helpful to you. Thank you for watching, and if you like it, do like the button and subscribe to the channel for more videos. And yeah, so please don't forget to comment and like and share at your community so people can understand. We have Telegram group Smart Investor, where we discuss various market updates, live trades, and friendly discussion. Would like to know, please do join, and directly we can have a more conversation on any other topics ongoing on the market. Thank you for watching. Bye bye. We'll see some other